Welcome, welcome. Again, we are here to talk about Social Security today. And my initial plan was to, while we're waiting for people to pop in, because it's always, give people a few minutes to get logged on and get Zoom figured out, like I just had to. The first thing I wanted to talk about was the topic that is not going to be mentioned in this presentation on its own anyway. We're still going to talk about it, but that is what's going on with Social Security right now? I think that's what's on a lot of people's minds. Just will Social Security still exist? Anthony, I'm going to go through a lot of the rules today, a lot of the things that you should be aware of as you're planning to take Social Security if you're still planning for it, or even things to think about while you're taking Social Security. So it's going to be a good fit for both of those groups. But the thing that's not put in this presentation that I think is worth talking about is where will Social Security be by the time we all want to start taking it if we haven't taken it yet? So I'm going to start there. I'm going to move out of the way so you can see my name, which is Anthony Gerbi. I think most of you know me. Worked with Stein Financial Group. I've been doing so for a while. And here's a little bit more about me and a few disclosures. Let's talk for a second about Social Security and what is going on with it. So, Social Security has been in the news quite a bit lately. They've talked about, well, what are we going to do about Social Security? If you see the headlines again, you'll see, the fund is going to go insolvent by 2033. I think the latest year is that year changes periodically depending on the federal budget and all sorts of stuff. And that sounds very alarming because that's less than 10 years away. And the question is, am I going to be able to plan on Social Security, period, Anthony? I mean, you're going to tell me all these ins and outs of it, but how do we know any of that stuff's still going to apply 8 years from now? And the answer is, and this is a little scary, but stay with me. You're right. Technically, we don't have a guarantee that Social Security will still be around 10 years from now, 20 years from now, 50 years from now, okay? Because it's Congress who could decide to fix it, decide to ruin it, or decide to eliminate it, right? So there's no guarantee. However, I feel very confident that Social Security will be around in all of those time frames I mentioned, and that it will be substantially similar to how it is now. There may be tweaks. I would be pretty surprised if there are tweaks to people who are A, already receiving benefits, or B, who are nearing the age at which you receive benefits, which, by the way, is 62. We'll go through all that in a minute. But the reason I would be very surprised if there were meaningful cuts for especially those groups is, and I hate to be so cynical, I don't hate to be so cynical, but it is a very cynical point, is self-interest from our politicians. Again, politicians are the ones, Congress would have to be the ones to change this. And if you cut Social Security benefits, not only would that be bad for the millions of people who depend on Social Security for their income, maybe solely depend on it, that would be terrible for them. But secondly, it would be probably a one-way ticket out of office the next election cycle. You don't want to put anything past Congress, of course, but I think the self-interest part of the equation is a strong enough motivator where it's okay. I think Social Security is going to be around. Now, will there be tweaks? I do think at some point there will be tweaks. Will there be tweaks for anybody on this call or anybody over 40 years of age? That is a little bit more, I don't know, because I would guess if they had a choice, well, and they do have a choice, but if they were mocking up, okay, what can we do to fix Social Security? They would want to cut benefits or increase taxes for younger people for a couple reasons. One, it doesn't impact anybody currently receiving or about to receive. So all of this planning we're about to do won't be thrown out the window, right? That's the first advantage. The second advantage, which again is probably the bigger one from a politician's mindset, is younger people don't vote at the same rates older people or Social Security takers do. So there's less chance you're going to get an angry voter base that removes you from office the next term, right? So I bring that up, and you've probably heard me say that before. That's been my line for a while. It's one, because I believe it to be true. But two is Social Security is such an integral part of our not just country, but our economy as well, that messing with it at a significant level really has the potential for crazy unforeseen consequences. And you could say, depending on how you feel about the current administration, you could say, Anthony, I have learned to expect the unexpected, and I think that's somewhat fair. But this is one where I think the cost benefit is pretty clearly on the cost side rather than the benefit. So no guarantees. By the way, this is a little trivia for you, not that this is really going to matter, I think, but when you hear that insolvent term, oh, Social Security is going to be insolvent by 2033. A lot of headlines make it sound like, oh, that means Social Security is going to go away. We just don't have any money for it anymore. What that really means is that the bank account of Social Security will have run out of money if nothing happens. But by, again, it's like 2033, they'll still have revenue coming in every year. So even if that were to happen, even if we drive at the brick wall and put our foot on the gas and don't swerve one bit, it will still have money coming in every year. We just won't have any extra or any cushion, right? Which is not a good thing. I'm not trying to undersell that. I'm just saying it's not quite what I think the headlines have made it out to be. So, with that said, let me get into what I actually want to talk about today, which is Social Security as a benefit. How do we think about it? When should you take it? How do we work it around some of the other things you have going on in your retirement timeline? Do you need to be retired to take Social Security? That's a good question. The answer is no, you don't. So, how does that work? All that stuff. If your monthly benefit is $2,000 today and you live 30 more years, you will net out about $1 million in lifetime benefits. I think we know that, right? If you're making money month after month after month, the longer you live, the more money you get. But this really does add up. If you take Social Security at 65, let's say, and we'll talk about the ages in a minute, but you live till 95, you're going to have made $1 million off of Social Security if your benefit's $2,000 a month, right? So that's a powerful thing. That is super important for somebody like me when I'm looking at cash flow for people and saying, can we make a retirement date or that's a little bit earlier or later or whatever work financially speaking? It's a huge deal to get this right. And it's tricky to get right because um, there's also cost of living adjustments that we factor in. The cost of living adjustments over the last 20 years have averaged about 2.5%. Now, that includes a few higher numbers in the post-pandemic years when inflation really picked up. But you get that too. So if you start out at 2000 today, in 10 years, just if you get 2% a year increase, it'll be 2400 bucks a month. In 30 years, it'll be 3600 bucks a month. So don't negate that when you're thinking about it. But the tricky thing is there are some variables with Social Security that you control and there are some that you don't control. And we're going to go through all of that. But here are two that you do control to an extent anyway. How much you earn over your working career and how long you work potentially makes a difference, right? And because that determines what you're paying in to Social Security, that determines then how the formula sends that money back to you when you apply for it. And secondly, the age at which you apply for benefits, regardless of your retirement date. Okay. And that is something that I think a lot of people just couple in their minds where I retire, I take Social Security. Whatever age that is, that's when it is. And I try to encourage people to not couple those two things together. There are many, many scenarios, especially for people with pensions, which most people on this call have a pension. And if you don't, that's okay. This will still apply. But if you do have a pension, even, you might be able to retire, turn the pension on, but maybe even wait a few years to turn on Social Security. And why you would want to do that is because of the escalation in benefits as you wait to take Social Security, even if you're not earning income anymore. I think a lot of people overlook that when it comes to calculating this stuff. So that's one thing I try to put on people's radar. Okay, and you might be asking, well, how would I possibly wait to take Social Security, Anthony? Well, we might look at using some of your assets to do that, like your retirement accounts. Again, everybody's situation is different, but that's a very common scenario that I think most people don't always think about that as their first option. So, how are your Social Security benefits calculated? Look, I don't think you need to know how these are calculated. The couple things you need to know. right, are you can take Social Security as early as 62, and it is your highest 35 years of earnings. Those first two bullet points or triangles there, okay? That is key because it's most likely if even if you have a full 35 years of work history, which a lot of people by the time you're taking Social Security do, your age 62 year of work, you're probably making more money than you did in your very first year of work when you were 18, right? And got a part-time job maybe or something like that. And that's every year that you make more money than one of your low rungs on the totem pole, it replaces it. Or low rungs on the ladder, I guess would be the better example because all the rungs on a ladder. So essentially, you are by inputting a higher earning year, you're replacing a lower earning year. Even if you have the full 35 years, working another year will still increase your benefit. Okay? So that's the thing to know. I think we all get that to an extent, right? The longer I work, the more money I make, the more Social Security I'm going to get. That's essentially how it works. Okay? So let's give a quick example here. And I don't care if you know how this formula works, frankly. If you're somebody who's curious about that, the information on the screen, for those of you who say, look, all I care about is that bottom line dollar amount, which I would say is most people, totally fine. That's all I would really worry about too. I have this page up here because it's got an acronym that you're going to see a few times, and I wanted to just briefly talk about it. PIA, okay? Primary Insurance Amount. This is a acronym that you will see tied to Social Security, and it is needlessly confusing. I do not like it, but I will tell you what it means. Your PIA, primary insurance amount, is the amount of Social Security you get at the year you turn your full retirement age, or FRA, which is another acronym you'll see. Now, your full retirement age, as I've got on the screen, depends on when you were born. If you were born in 1960 and later, which is now most people applying for Social Security, it's a flat 67. So your full retirement age is age 67. They did a phase out. You can see that here. So if you're, depending on when your birth falls, you could be at 66 in some months. But a lot of you, it's going to be 67. The full retirement age is the age at which you get your PIA, your primary insurance amount. And you might say, rightfully so, Anthony, why do I care about what PIA means? It's just a dollar figure, right? And I'm like, yes, it absolutely is just a dollar figure. You don't really care what that is. There's a couple reasons you care about your full retirement age, but that if you see PIA and you're like, oh, that's kind of confusing. What does that mean again? Is that something different than regular Social Security? No, it's just the dollar number that corresponds with the year you turn your full retirement age. Why they have that separate acronym, I wish they would just get rid of it and just show everybody the dollars. I think that's what we all think in, right? Or at least maybe me. I'll speak for myself. I think in dollars. What's the dollar if I apply now? What are the dollars if I apply later? That's what we care about when we're making decisions. The acronyms don't really matter that much. So I think, again, a lot of people know this, but I want to show you what this is. If you're, and I'm going to use the furthest to the right column here, the full retirement age is 67, but you can obviously see it if it's 66. If you apply early for Social Security at 62, which is totally legitimate for some people, that's absolutely the right thing to do. So I'm not poo-pooing that at all. But if you apply at 62, you will get 70% of the benefit that you would get at 67, that PIA at your full retirement age, you get 70% of that. Every year you wait, you get 5% roughly. For the first few years, it's 5% more of the 100% total. So you start at 70, you work up to 75, 80, 86, 93, 100. So you get that even if you're not still working. Okay? Let me say that again. Even if you retired at 60, your benefit is still going to go up between 62 and 67 and even beyond that till 70, even if you're not working. And I think a lot of people know that. Hopefully that's review. But if it's not, that is a big reason why it often makes sense to wait for Social Security because you get these built-in increases. By the way, if you wait to take Social Security, you also get the cost of living adjustments. while even if you're not taking it. So when they announced, a few years ago, it was like 8%. I think that was 21 or 22, 2021 or 2022. They announced an 8% cost of living adjustment because inflation had been so high. You would get that. Your benefit would get that as long as you were over 62 and even if you were waiting to take it. So waiting has a lot of benefits. It also has costs, don't get me wrong, and we'll talk about that. From 66 to 70, or from 67 to 70, after your full retirement age, your benefit goes up by 8% per year. Okay, 8% per year, guaranteed. So, one of the ways that you could put that is that's 8% growth, government guaranteed. You cannot get that anywhere right now, right? You can't get that on a treasury bond or a CD at the bank or a savings account or anything like that. Your benefit every year you wait after your full retirement age goes up 8%. So after I say all this, and if I'm talking to somebody one on one, usually the question is, well, doesn't that make sense for everybody to wait then? I mean, look at all the benefits here. And for a lot of people, I would say it does yeah, absolutely. That's why it makes sense for a lot of people to wait. But there are circumstances that make it better to take it earlier, right? And I think we all know what the obvious ones are. Hey, I really need the money. Like, I can't retire if I don't take Social Security. That's a good reason to take it sooner. The other piece that makes this really difficult is we don't know how long you are going to live. Okay. And there's a slide that touches on this. But how long you live, how much you get of Social Security over your lifetime really would be the key piece of information that would tell me exactly when you should apply. Of course, that's unknowable, right? But I talk to people all the time. You know your family history, you know your current health. Hey, Anthony, I'm thinking about taking it earlier because, I haven't had good health. I don't have great family history. I think let's just, a bird in the hand is worth two in the bush here. And that's totally fair. I would say don't underestimate how long you might live for sure, and I help with that, but that's totally legitimate. So that's what makes this timing piece so tricky. It's important to know what the differences are, but the timing piece is ultimately a personal decision for everybody. So in other words, I don't have a one size fits all answer where I'm saying, yeah, everybody on this call, you should absolutely wait till 70 because look, it's the biggest number. It is the biggest number, but what's going to be the best route for you to take? Um, you can, if you have not, you can go to the Social Security Administration website, and I recommend the website rather than calling or going in, certainly. Going in, I've heard it's just a nightmare these days. Not because, once you get in, it's fine, but getting the appointment, they're booked way out, and calling them, you wait on hold forever. They're short-staffed. Um, but you can go online and find out a lot of this stuff. So if you're somebody who's comfortable with that, that's a great resource to get this information. By the way, there was just a new rule implemented, and it sounds worse than it is, but let me explain it, where no longer when you call Social Security can they just confirm your identity over the phone. When you call them now, you're going to need to log into your online account and I think it's a pin they send you or something like that to prove you are who you are. It's an extra security feature, but you got to be able to log in if you're going to call them. Otherwise, if you don't want to create an online account and you need to call them about something, they're going to tell you, sorry, I can't confirm your identity. You're going to have to go into an office. And like I just said, that's kind of a nightmare right now. So if you don't have an account and you haven't taken, if you've taken Social Security and you're already set up and it's all good to go, good. You're probably just fine. But if you're not, if you haven't taken it yet, you're going to want to make an account from Social Security sooner rather than later, is my point with this. So here's what we consider. Here's what somebody like me considers when we decide when to take Social Security. Health status, right? If you've got a chronic or condition, or God forbid, something that is going to shorten your life expectancy, that is a primary decision factor. That definitely puts a lot of weight on taking Social Security sooner. Okay. Life expectancy. That is basically the same thing, I would argue, right? How long are we going to live? How much do you need the money right now is another piece. Because if you're like, well, no, between my pension and my deferred comp, I am totally fine cash flow wise. Well, maybe we do let Social Security continue to grow by waiting for it even after you retire. Whether or not you plan to work, I'm going to get to that in a minute. That is a really key piece for applying early or not, and the pros cons of doing that. And lastly, and this is another one that gets overlooked, survivor needs. Okay, let me talk about that for a second. Survivor needs. Actually, we're going to go through these one by one, so I'll get to that when I get to that. I don't want to jump the gun. Um, so, key points to remember. If you apply early, your benefit starts lower and stays lower for life. Now, lower might be enough, okay? All we care about is enough, or at least when I'm looking at numbers, I care that you're getting enough money. You can always, yeah, wait longer, you can always get more, but is there enough there to fund the rest of your life? COLAs, or cost of living adjustments, that's the inflation increases basically, magnify the impact of early or delayed claiming. The longer you live, the more beneficial it is to delay benefits. Okay. By the way, I don't think this presentation has it, but a lot of people are always curious. How long do I have to live, Anthony, to make it worth it to have waited till 70 for Social Security? For waiting until 70 versus taking it as soon as you can, you usually have to make it to about 80 for those lines to cross. So if you get what I'm saying, if you start earlier, you get a smaller number, but there's more years of that number, right? Because you started earlier. If you wait all the way till 70, you get a bigger check, but obviously for fewer years because you waited 8 more years to start it. Where those things cross over is about 80 years old. It depends on your benefit, but it's around there usually. So, in other words, if you think there's a decent chance we make it to 80, waiting for Social Security is going to net you out more money over the course of your lifetime. Again, not the only consideration, but that's a big piece of the puzzle. Your benefit may be taxed. In fact, for most of you, it will be taxed. This is the first time I've talked about taxes. And this is a key thing for people who may already be receiving Social Security, okay? I think there's a page that talks about taxes. Social Security in Minnesota is taxed federally. It's taxed federally everywhere, and at the state level in Minnesota. Other states do not tax Social Security. Wisconsin, even though they have a state income tax, does not tax Social Security. And then, of course, there are states that don't have state income tax, period. Florida, Texas, Tennessee, South Dakota, lots of them. Um, so there are, if your income does fall below, I think it's about 40 some thousand, you do get zero taxes on your Social Security. But for most people I end up working with, we're above that threshold. So the key thing for you to know, number one, Social Security is taxable. We just got through tax season. Every year in tax season, despite my best efforts, and this is not a fault of anyone individually, but despite my best efforts, I get a call that says, "Ooh, we really owed on our taxes this year, Anthony." And I'm like, "Oh, okay. Well, what's going on? What changed?" And then, well, this is the first year of Social Security, so I'm wondering if it was that. And I was like, "Did we remember to withhold taxes?" And I say we kind of nicely because I don't set that up for you. That's your benefit. But I try to remind people at least. And I say, did we remember to withhold taxes?" And they're like, "Ooh, I don't know if we remembered to do that, right?" And that a lot of times is the problem. You sign up for Social Security, you're so excited to get the check, but you forget to withhold taxes. You can set up tax withholding right through the website if you apply through the website, or somebody on the phone or somebody in person should be able to walk you through it as well. But don't forget to do that. Um, there's all sorts of tax things with Social Security, but don't forget that it is taxable. That's often the common thing that's forgotten. And then, what happens when you forget about it? Well, you just end up owing money on your taxes when you file them. It's not a fun surprise to have when you owe a couple $1,000 potentially. And then you got to go in and get it fixed for the next year, or you're going to have the same thing all over again. So don't forget that. Um, your benefit may be taxed and reduced to cover your Medicare premiums. Okay. They take your Medicare premiums right out of your Social Security check. So remember that when you're looking ahead to, hey, this is what my check's going to be. Ooh, lucky, that's a good number. I like that number. Well, that's a pre-tax number when they quote it to you, and it's before they take out your Medicare premium. So we got to remember that as part of the puzzle here. Um, and don't let the earnings test. I'll talk about the earnings test in just a second. Delaying benefits may give surviving spouse more options. I'll get to that in a second here too. Um, maximizing your benefits. This is something I don't think many of you are going to need to do, but I wanted to throw it in here just in case. You can go if you create an online account with Social Security and you can look at your earnings record, those 35 years that I talked about. And it's not a bad idea to go through and just make sure it looks about right. I mean, I'm not saying you need to audit all 35 years and say, oh, it said I made 50,000 $54,738, but I actually made $54,843. Let me go in and fix that. You could. For me, I'd say, I don't know why it's different, but whatever. And I don't think they usually don't make mistakes on that either because it comes right from your taxes. But if you had years, especially early on, it tends to be where you worked, hey, this was just a part-time job and it was kind of the reporting on it was kind of weird and we were back before computers, for example, so it's all paper stuff and they don't have it in there, you can go in and add it. So it could increase your benefit. I don't, for most people, they've got it right and it's not going to make that much of a difference, but I throw it in there just so you know you can do that. Um, Applying for Social Security at the optimal time. Okay, this is where I want to talk about spousal benefits for Social Security. So many of you may know, as a spouse, you are eligible for half of your spouse's Social Security. So in other words, if person A, Ann and Bob, let's use Ann and Bob as an example. Ann, her Social Security is $3,000 a month and Bob's is $1,000 a month. They just had different work histories. That's what it is. That's their personal benefit. Because they are married, Bob is actually eligible to take his spousal benefit on Ann's record, and he can get $1,500 from that because it's half of hers. So in the cases where half of his benefit, or excuse me, half of her benefit is more than all of his benefit, which is the example I just gave you, he's better off taking the spousal benefit. This also applies to divorced spouses as long as you were married for 10 years or more. Okay? So you have to have been married for 10 years, but even if you're divorced, you are eligible to take benefits on your spouse or ex-spouse in that case. A lot of people ask about that. They say, I don't want anything to do with them. I'm just not going to go there, Anthony. And the thing is, you don't have to go there. They never know that you do it. They're not privy to that information and it doesn't affect their benefit. So in other words, by turning on a spousal benefit for even an ex-spouse, their benefit doesn't get reduced and they never know about it. So there's no sense in not doing that if it's obviously more money for you. You're not going to create an incident. They're never going to know about it. So remember that. But when it says consider your life expectancy, your spouse's life expectancy, here's a common situation and how this works. Okay. Let's use Ann and Bob as the example. Ann's benefit is quite a bit larger than Bob's. Okay. Let's say again, hers is $3,000 a month. His is $1,000 a month. It might make sense if they need and they're coming into my office and they're saying, and we're looking at the numbers and we say, yeah, you need a little bit more cash flow here. We got to find money from somewhere to kind of make this retirement work. Um, what might make sense is taking Bob's benefit first, even his maybe only his personal benefit, not even his spousal, because to get a spousal benefit, your spouse has to be also receiving at the same time. So taking even his lower amount and saying, well, let's get that $1,000 a month from Bob coming in because I think that's going to make the difference here. And letting Ann's Social Security grow and waiting on that until maybe even 70. Why would you do that? And again, this is not right for everybody, but this is a common example. You would do that potentially because Ann's benefit is the larger of the two by a ways, and it's going to be the one that persists for the entire length of both of their lives. Because when a spouse passes away, the surviving spouse keeps the higher of the two Social Security benefits. You don't get to keep both. That is a key piece of information. Why is that important? Because if you have a big difference in Social Securities, you might want to let the larger of the two grow as much as possible, wait as long as possible, in other words, because then that is the benefit that will live on for both of your lives. So even if, let's say Ann waits till 70, her benefit goes up to $4,000 a month, and something happens, and she passes away before she even turns 80, let's say. Bob gets to keep that benefit that Anne took as a spousal benefit, the whole thing as a survivor in this case, for the rest of his life. So now he switches from his $1,000 a month to the 4,000 that Anne got by waiting. And that money is going to be in the household for the rest of the existence of the household, no matter who goes first. So that is again, that's for somebody like me to help figure out for you. But that is a key piece of the puzzle here. One of the things that I mentioned that I was going to talk about was, can you take Social Security while you are still working? Yes, you can. And it doesn't have to be with your career job either. I mean, a lot of people retire and then pick up part-time jobs, right? You can take Social Security while you're still working your full-time career job that you've had forever, the part-time job that you pick up after you retire from the career, or earning any income, period. I mean, I have a lot of people we work with who are retired, but oh, every year I help go coach softball over here and then I make a little bit of money for it. Great. You can still apply for Social Security. The thing that you need to know, though, is if you are under your full retirement age, okay? If you are under your full retirement age, which again is either 66 in some months or 67 for pretty much everybody here, and you apply for Social Security and you're still working, they have what's called an earnings test, which is every $2 you earn over 23,400 and this is how your taxable, or not your taxable income, but I believe it's your adjusted gross income, when you file your taxes, that number. Every $2 over 23,400 you earn reduces your Social Security benefit by $1 for that year. So let me paint the picture. Somebody's 62, their benefit is $2,000 a month. They want to apply for it, but they're still going to work and they're going to make $30,000 a year, probably, part-time, whatever their job is. Well, if they do that, they're actually going to reduce their benefit by about 3,000 bucks because $2 for every difference for every $1 reduction for every $2 difference in income between 23,400 and what they're earning. So I'm using round numbers here. But essentially, you'll reduce the benefit that you're getting that year. Now, that's not permanent. It's not like you're permanently reducing it. Now you're at an even more reduced number forever. It will go back to normal the next year if you don't earn income or you're not over that threshold. But essentially, what this means is even if you have a maximum Social Security benefit, if you earn more than $40,000, $50,000 a year, you're basically wiping out the whole benefit. So there was no point to having taken it in the first place. So a lot of people think, well, yeah, I'm going to work till 65, but I can take Social Security sooner. Well, why wouldn't I? It's just extra money coming in. And I say, well, yeah, you can, but you're probably not going to actually get anything for it because if you're still working full time, your earnings are going to wipe all of it out. So it probably doesn't make sense. Now, if you're over 67, you can earn as much money as you want and still get full Social Security. So there are people, and especially if you work past 70, which is, not super common, but still happens a decent amount. You should take Social Security at 70, even if you're still working, because you're at the maximum benefit amount, basically. But you can still earn all of it while you still earn the money from your job. So it's not necessarily to say, well, don't work. Obviously, you can, but it's something we need to be aware of. And I think a lot of people overlook that when they're making their initial plans here. So we talked about spousal benefits a little bit, both for current spouse, ex-spouse, you get one half, and then the maximizing the long-term benefits for the whole household. I kind of went into that a little bit. Oh, I see a question popped in. Hopefully, I haven't missed any other ones. Can I change after I'm already taking Social Security to take half of my spouse's? Um, I don't believe you can anymore. There used to be a thing. This got even more complicated in the past. Um, I'll follow up with you on that because I want to. There was a rule that you could flip flop. You could take spousal benefit and then go on your personal, or take your personal and then go on your spouse's at a different age. A few years ago, now like 5 years ago, they closed that loophole. So you can't do that anymore. Basically, what it means is when you file for Social Security, you're filing for both your personal and your spousal at the same time, and you take whichever one's bigger. So the answer, I believe, is no, but I'll follow up with you on that. Aaron, if you could make a note on that, and I'll follow up and make sure that none of those older rules apply either. I haven't mentioned those weird, complicating things because most people are too young now to be able to do that loophole because they closed it for people who are younger. If I retired in Minnesota, but later moved, another question came in. If I retire in Minnesota, but later move to Texas, a non-Social Security tax state, will my Social Security be not taxed? Or what if I moved overseas? Will I still be taxed? Well, those two slightly different questions, very important distinction there. The answer to the Texas is simple. If you move to a state with no income tax, your Social Security is not taxed, even if you earned all the money for Social Security in Minnesota. That is also true, by the way, of your pension and your deferred comp, if you have those, or any retirement account. A lot of people don't realize that. They say, well, my para pension is a Minnesota pension. That's true. You earned all the money in Minnesota. But if you collect that pension or take out money from your deferred comp when you're in a state, and you have to be a resident there, you can't just visit for the day. But if you're a resident of a no state income tax state, doesn't matter where you earn the money, matters where you're a resident of when it would be taxable, which is when you take it out or when you receive it from para, your deferred comp, or Social Security. So that's the simple answer. Overseas is trickier. Um, I'm going to assume overseas is a different country, not necessarily a U.S. territory or, a military base or something that can get a little tricky, but let's just assume it's a totally different country. Did you know that the United States is one of the only countries in the world that still taxes its residents or its citizens when they live abroad? So you could go move to, I don't care, pick your country, Australia, and live there for decades. But as long as you're still a U.S. citizen, you are still taxed on your federally, of course, not state-wise, but federally on your income. So that's true of Texas too. Obviously, you still have to pay federal income taxes if you live in Texas. But you mentioned overseas, and a lot of people, if they were to move overseas, overlook that sometimes, and that can really come back to bite you. No state taxes if you live overseas, though. So if that was your question, just the Minnesota connection, then it's the same for both. Right. You pay the taxes of the state or territory that you live in. And if that's not Minnesota, you don't have to worry about Minnesota taxes at that point. So hopefully that answered the question. I know I kind of probably answered more than you even wanted to answer, but you kind of hit on a key point there. And feel free to follow up. So, strategy for maximizing your benefits, minimize taxation. So, there's one piece of Social Security taxation that I have not mentioned yet, which is at the federal level. Most people, there are brackets to this, but most people fall into the income bracket where you only pay taxes on 85% of your Social Security check. Okay, you're not that you're paying 85% taxes, but that you are only 85 cents on every dollar is taxable. Okay, I'm going to backtrack for 1 second. I see a follow up. Is this why some people give up their U.S. citizenship? Yes. Among other reasons. Look, I'm sure that's a very personal decision for everybody. But yes, the only way to get out of paying taxes, even if you live abroad to the United States, is to renounce your citizenship, basically. I mean, it gets complicated, but don't if you do plan to move abroad, don't forget that if you're a citizen of the United States, you are still taxed by the United States, even if you don't live there anymore. I know that's not a super common thing, but it happens, and people do forget about it, and it's annoying. So yes, that is a reason why some people give up their citizenship. I wanted to get to that question. So um, only 85% of your Social Security is going to be taxable federally. So, what does that mean? That means $1 of Social Security is worth more to you than your $1 of Social Security is worth more to you than $1 from your deferred comp, pre-tax deferred comp, or your pension. Okay? because it's taxed less. Now it's still taxed. Don't forget about that, right? I hope everybody, if you learn one thing here, remember that Social Security is taxable. That'll save you a headache, I promise. But it's less taxable. So one of the strategies that we can use is what if we use your deferred comp and your payroll when you retire, and while you're in potentially even a lower income tax bracket, so we're benefiting that way, and then wait on your Social Security so it becomes the biggest piece of the pie in terms of your cash flow that it can be, and that will save you taxes in the long run. Now, 15% of the check being not taxable, does that save you tens of thousands of dollars every year? No, no, but it will add up. It will add up to tens of thousands of dollars over a lifetime, if not more. So that's another thing to think about. Again, I'm throwing all these things out, and you might be writing them down. Anthony said to think about this. Anthony said to think about this. That's great if you're that type of person. If you're the type of person who says, great. That sounds good. I guess I'll try to remember that, Anthony. That's when you call us and we help. I do this every day. I mean, genuinely, I pretty much talk about security, Social Security almost every day. I think about this stuff very easily, like it's just practiced for me. So that's a great place to we're a great resource for that. By the way, you can also go back and watch this whole presentation back if you want. We're recording it. It's going to go up on our YouTube channel, which is if you just search Stein Financial Group YouTube, or maybe Aaron, you can put the link to our YouTube channel in the chat. You can see most, if not all, of our previous presentations on stuff like this. So you can always go back and reference it too. And yes, there it was put in the chat that the only two countries that tax um, foreign citizens that are foreign residents are the U.S. and Eritrea. So, the U.S. is unique in that way, and a lot of people don't realize it. Um, Here are some strategies, by the way, to reduce taxes. Anticipate when you're R&D. There's lots of different things we can do. We don't need to go through every example here, but we need to be considering what Social Security is going to do to your income, and does it open up a new avenue to reduce taxes in some way, right? How do you how do we manage the difference between Roth assets and regular assets, and how does Social Security fit into that puzzle? Super important piece that we take into account when we look at this stuff for you. And by the way, IRA Roth is, I'm not going to go into all the 9 yards there because that's not exactly what we're talking about here. But essentially, what it's talking about is if you retire and you have all pre-tax assets, I call that the good problem to have. I tell people all the time, hey, you've got the classic public employee good problem to have. You've got a pension, deferred comp, Social Security, they're all taxable, right? So you've got a lot of income, but it's all taxable. How do we potentially reduce taxes? Well, did you know that you can convert money from pre-tax to Roth, which is after tax, from your deferred comp, from your retirement accounts? And maybe you do that while you're waiting to take Social Security, and we can save on taxes. And again, it can get complicated quickly, but those are the things that we're thinking about. So coordinate your Social Security with these other sources of income here: pensions, IRAs, 401ks. This is, again, the good problem to have. You've got a lot of income coming in, but it's all taxable. How do we minimize those taxes, or at least do it as efficiently as possible, right? You've seen now required minimum distributions. A lot of you might know what that is. That's on your deferred comp accounts, or an IRA, or a 401k, or 403b. Any pre-tax money, essentially. When you turn 73, you are forced to start taking some of that out every year. Why are you forced to take it out? Because you have to then pay taxes on it. That's why the IRS makes you do it. Now, I said 73, right? So a lot of you are younger than that. You don't worry about it for right now. We'll get there. But that's key, because obviously all of you will have gone on Social Security by 70. So that will add potentially income to your plate by, without you having to do anything or changing anything. You're just forced to do that because of the rule. So we need to take that into account when we're looking at the tax part of the equation. So the questions that I most commonly see: when should I apply for Social Security? Obviously, that's the number one. What if I want to keep working? Does that change when I should apply for Social Security? What if I've already applied? And is there anything I can do? You can, if you've already applied, turn it off. and then turn it back on later. I will say that's pretty rare that I find that that's the right thing to do financially, but we can look at it. And I think, especially if you've looked at this presentation and you're like, okay, well, there were some things I wasn't quite aware of before, and I already turned on my Social Security. Maybe I shouldn't have. Well, we could see if turning it off would make a difference. You do get benefits for turning it off, and not receiving it and waiting until a later date. I will say that's rare, but it's possible that that could affect a few people. Um, how much will my benefit be? That's logging on to Social Security. I highly encourage everybody to do that. It'll show you at different ages whether you work to that age or if you want to say, I'm not going to work past this age, but show me what it would be if I waited just to take Social Security. It'll give you just a good sense of what that check's going to be. It won't be perfect, by the way, because we don't know what the cost of living adjustments are going to be in the future. So it's going to be pretty close, but it's going to probably be a little bit less even than you'll actually end up making. Spousal benefits, okay? Very important as we talked about. And then what's the best long-term strategy? How do we build this out, especially if you're a couple, a married couple that has two Social Security benefits? Very important to strategize around those as a unit so that we can make the most of both of them in concert with each other. And what do I do next? So it's too important to just guess at it or just say, well, I'll just take it when I retire and I'll figure it out. You could be leaving money on the table if you do it that way. Certainly, there are people who retire, take Social Security immediately, and it was totally a fine decision, if not the absolute right decision, right? But without doing the work, you don't know that, and you could be leaving money on the table. So that's the last piece. If you have not taken Social Security yet, we should absolutely have a conversation about your benefit, what your retirement plan looks like. Even if you're already retired and you haven't taken it, that's still very important. If you have taken Social Security, then to an extent it is what it is, but we can still review how we can work around the tax part of it as best as we possibly can in terms of making it more efficient. There's always going to be taxes, but how do we make those as efficient as possible? If you got walloped with a big bill this year on your taxes and you want to, oh, maybe I'm not withholding enough from Social Security, we can help you look at that. So all the contact info is up on the screen. There's one more thing I want to mention, and this is a brand new piece of information. I mean, literally this year. Before President Biden went out of office, or before the inauguration in January, I don't know, this wasn't like the last bill he signed, but it was one of the last ones, was an elimination of what they called the windfall provision for Social Security. Now, if you've never heard of that before, it doesn't apply to you. It generally applies to firefighters, police officers, some teachers. There's a few other categories of public employees that it applies to, but if you've never heard of this, don't worry about it. This doesn't apply to you. That's why I'm saying it at the end here. But if you were one of those groups, you may know that a lot of those workers had reduced Social Security. You'd worked, and part of it was because you didn't pay in as much, and some of that went to your pensions. Again, you probably know all this already. That provision was removed this year. So, in other words, what changed was if you were a firefighter and you worked for 30 years at the fire department and you don't have much for Social Security because of this provision, you just pump more money into your pension. You didn't get taxed for Social Security. And again, this is a special rule. But you moonlighted somewhere. You had a part-time job for many of those years that did pay Social Security taxes. Now, all of those taxes that you paid count for you, and you can apply, and your benefit will get bigger. So they just removed this provision that will allow police, fire, teachers, but not all teachers, but some teachers, to get bigger pensions or excuse me, not bigger pensions, bigger Social Security checks than they used to get. Again, if what I said was Greek to you, you're like, I've never heard of any of that before, Anthony. Just ignore it. It doesn't apply to you then. But occasionally, more than occasionally, quite regularly, we work with people who worked at the fire department, the police department. Those are the two most common jobs that this applies to, and they do have that reduced Social Security. And you need to know, hey, that's been removed. You might have a bigger check coming your way than you thought. So it's only a good thing. It's only going to increase money. There's no downside to it, but I'm just trying to make people aware of it. So with that, we've reached the end of my information today. All right. Thanks, everybody. I don't see anything in there. If you were in the middle of typing something, just send me an email. You've got both our general email and my email on the screen. So thanks, everybody, and hope you have a great rest of your day.